Will the bears make history in American markets in October, or will the bulls finish 2023 as strongly as they started? Can they sustain more than 7 stocks? We will discuss this and more in this video. Let's get started. Market overview. As you know, American markets have been showing a double top formation for a while now, which we've been observing on weekly and monthly charts. We've discussed that this formation suggests the potential for a major downturn in the markets. We evaluated the possibility of the market reaching 15,000 points, especially in August. We also mentioned that the market failed to sustain those levels in September and hinted at a potential downturn. This week, we've seen a continuation of the bearish sentiment, although there was a slight recovery in the middle of the week. However, the selling pressure persisted. As we approach the next week, we are entering a very crucial period. At the time of recording this video on Saturday night, government shutdown discussions were ongoing. They were attempting to reach a temporary agreement for a 45-day extension. So far, all agreements between Democrats and Republicans have not yielded results. The timing of these discussions is interesting this time because everything is happening in a perfect storm environment, waiting for someone to score a goal or, to put it differently, the American economy is walking on the edge of a cliff. Who will push it over the edge? Who will be responsible? The problem is so significant that, for example, look at the changes in the banking system. Deposits in commercial banks, showing a historical decline over the last 50 years, have witnessed an incredible surge in 2020, especially after the pandemic hit. However, the decline has been so sharp recently that it's alarming. This is illustrated by the annual changes in deposits. We have reached a level that has never been seen before, indicating a severe decline. Consequently, such a massive withdrawal from the market and the banking system will likely involve significant problems. On the other hand, we have been discussing America's debt issue. Interest rates have indeed risen. However, we are also talking about the risk of refinancing the debt. What I mean is, about 1/3 of America's bonds are maturing in the next 12 months, requiring them to be rolled over, and 52% of them are due to mature in the next 3 years. In other words, the United States needs to refinance about $16 to $17 trillion within 3 years. Currently, no one, whether it's the West, China, Russia, or anyone else, seems interested in buying American bonds. This makes the debt rollover even more difficult. Even the general public has started to avoid it. In fact, JP Morgan CEO mentioned last week to be prepared for a 7%. There was some implication behind his statement. In other words, nobody wants to lend to America, and this is causing the bond yields to rise, independent of inflation. In essence, there is a serious debt crisis, and we have been talking about it for a long time, which has been one of the goals of this channel to gradually narrate the impending storm. Now, let's quickly look at our charts. Monthly charts. Now that the month has ended, let's take a look at the monthly candlestick chart. A significant red candlestick has formed, indicating important breakdowns. Regarding the government shutdown, even if there are temporary upticks, the main economic problem remains. The Democrats have an opportunity to push the crisis onto the Republicans, and given the circumstances, the government shutdown discussions have gained immense importance. Under normal circumstances, it wouldn't matter much, at least not for me. Our trend following level for Nasdaq is at 14,950. Last week, it approached that level, but then pulled back and didn't end the week on a positive note. It closed with an indecisive candlestick. Generally, the direction seemed positive, especially with the Republican representatives' initial comments on Wednesday. However, the sentiment turned negative on Friday. As I've mentioned before, my concern is that macroeconomic data and realities are still there. Will this be a trigger or not? We'll see. But as we continue to see the Fed tapering and interest rates remaining high, coupled with the ongoing debt issues, I'm actually looking for what might trigger the markets. In other words, where will the black swan come from? We're only watching for that. In any case, as long as Nasdaq remains below 14,950, my trend following level, the direction is likely to continue downwards. S&P 500. Similarly, our trend following level for the S&P 500 is at 4,377. The candlestick for S&P 500 looks a bit worse than Nasdaq, and the daily candlestick indicates further downward movement. Dow Jones has fallen below the 200-day moving average, and its candlestick looks worse than both Nasdaq and S&P 500. Our trend following level for Dow Jones is at 33,890. If it stays below the 200-day moving average, we may see worse days ahead. Individual stocks. I've examined many stocks before the broadcast, and except for the Magnificent Seven, the primary 7 stocks, most have experienced significant declines. In fact, the majority of stocks are either in the negative or near zero territory. However, these 7 stocks have been supporting the index. Apple. One of these 7 stocks is Apple, which has also given a sell signal. As long as it stays below $175, the direction for Apple is likely to be downward. If it manages to go above $175, the situation may change. Tesla has shown a slightly stronger reaction, but there is still a lot of volatility. I've included a longer-term chart this week to help you see the fluctuations better. Our trend following level for Tesla is at $256. If it remains below this level, the direction is likely downward, but it could establish a new trend channel and possibly test and break it from above. Nvidia is one of the key companies in this bubble, with its stock still hovering around $434. It's remarkable how they resisted the $400 level. However, the bubble is becoming evident, and evidence has emerged that the revenue figures reported by these companies are misleading. There is an SEC investigation into this, but it's strange that it hasn't received much attention. This is something that not many people want to talk about, except for some traders and analysts on social media. Nvidia has a market capitalization of over $1 trillion now, and it's clear that there is evidence that their orders are fictitious. However, the SEC seems to be turning a blind eye to this issue. By the way, if a government shutdown occurs, the SEC will also be closed, so no research or actions will continue. Let's keep this in mind. In conclusion, our trend following level for Nvidia is at $441. Let's quickly take a look at cryptocurrencies. Bitcoin, we currently have an average of $26,968, which is above it. We've been hovering around this range. While I'm recording this, you can do positive below negative trading. For a while now, as you know, we've been approaching the descending channel from $27,600, and until that level is broken, maybe this region will continue to fluctuate between $27,000 to sell and buy around $26,000. Or you can buy at around $26,000 and sell above $27,000 for a horizontal trade. But when this range bends outside somewhere, there will be a strong move either up or down. I still see possibilities on the downside, but if it goes above $27,600, I might start talking about an upward trend. So, we need to be cautious with our analysis at these levels because I want to see how it behaves during a banking crisis, as I've emphasized repeatedly. Ethereum. Last week, it was doing better than Bitcoin. What happened? There were some discussions about an ETF and the possibility of getting approval for it. So, now, in an ETF predominantly focused on Bitcoin, the shares of Ethereum will increase, and so on. Ethereum performed well last week, but $1,680 is a critical level. As you know, there was quite a bit of trading below and above this horizontal range, but I follow a short-term positive view above $1,680. If we stay above $1,680, Ethereum can turn more positive. However, if it drops below $1,680, especially below $1,630, it turns more negative. I have some concerns about the coming ETF, or even the acceptance of many ETF applications. Because I don't want these ETFs to rise. On the contrary, the possibility of manipulating the market in the opposite direction with these ETFs increases significantly. So, there's a saying. Be careful what you wish for. Because what you wish for may actually lead to chaos, just like in the silver market with paper trade, paper gold, paper silver, where they suppress it with virtual products. In fact, they start creating derivatives in the same direction, and things can get messy in that direction. Now, let's talk about XRP. Ripple has a similar picture. It's at $0.5196, positive above the 200-day moving average and negative below it. I wish you all very cautious, profitable, and wonderful days.